The move followed a year of underperformance for Magellan, the loss of a $23 billion mandate from St. James's Place, and confirmation in December that Mr. Douglas had separated from his long-term spouse Alexandra. That same month, Chief Executive Brett Cairns abruptly resigned, citing personal reasons, which have never been revealed. To steady the ship, the company drafted in co-founder Mr. McKay to oversee its main global equities portfolio. Mixed views. Magellan's executives have remained upbeat about Mr. Douglas' return, although skepticism has begun to bubble across Sydney's competitive funds management industry. One executive at a rival manager said Mr. Douglas would struggle to regain trust with investors and staff, given he stepped down in a period of tumult when leadership was most needed. That's the exact time you need the manager to say to everyone, "Don't listen to the noise. We're not changing course." That's all he had to do, the executive said. The persistent outflows and share price declines led the company to unveil a buyback plan under which Magellan can acquire up to 10 million shares on market worth 5.4% of the register. Last week, Magellan shares touched the lowest level since 2014. They have lost 4/5 of their value from a peak in February 2020, just before the pandemic. Magellan shares need to return to $35 if options soon to be issued under the company's staff retention plan are to have their intended effect. Fund managers and strategists are grappling to determine how far the fund outflows will run and whether the reshaped investment team can begin to reverse a rough patch of returns to lure back investors. Magellan's funds under management stood at $106.1 billion a year ago, and have since tumbled to just $69.1 billion, according to the most recent data from the company. There's been a huge volume of funds under management that has been taken off them, and that has been accelerating if anything in the past few weeks, said Will Seddon, a director and member of the investment team for Whitefield, a listed investment company. Whitefield holds an underweight position in Magellan relative to its weighting in the S&P ASX 200 on the expectation it believes the group will underperform in the near term. The hard thing is you don't know where earnings will end up before outflows find a base, said Mr. Seddon. They probably need an extended period of strong performance to ease people's concerns that a change in the investment team might have undermined the quality of their investment calls. Others have taken a more optimistic view and see the rapid share price decline that has wiped billions of dollars from the company's market value as a buying opportunity. On Monday, Sean Lowe, an analyst with Morningstar, placed a fair value estimate of $33 on the shares, more than double the closing price on Friday, in part because of a favorable outlook for the firm's main portfolio. "My belief is that the Magellan portfolio is in a very healthy state," Mr. Lowe said. "There are rough patches, but if they can stabilize the ship, a lot of those concerns will be short-term." A tailwind from climbing share markets following a decline in global equities through the start of the year driven by worries about rising interest rates and war in Ukraine will help too, he said. "Retail outflows are smaller than I expected. It's hard to predict the future, but I think Magellan has loyal investors who are sticking with them,"